Hello and welcome to Morning Brief Market Sunrise. It's Wednesday, 6th August. Coming up on the show, Asian and European markets move higher as earnings and tariffs take centre stage. Will the US follow suit? Weight loss drug giant Novo Nordisk sees sales of Wegovy soar, but sales in America disappoint. And mining giant Glencore decides not to change its listing to New York and sticks with London. So grab your coffee and let's own the morning. The first thing you need to know before the opening bell rings is just how will US markets perform after yesterday's frankly disappointing performance. Well, for some clues, let's look to Asia first, where markets had a pretty decent, if not entirely spectacular day. In Europe so far, things are looking relatively positive this morning as well. Some mixed earnings on the continent. It's fair to say it was a difficult quarter for drug giant Novo Nordisk, and Dutch bank ABN AMRO also fell short of expectations. Siemens Energy in Germany, though, was perhaps the standout. Well, in the US, it looks like it will be a positive start to the trading day. Watch out for speeches by Boston Fed President Susan Collins and San Francisco Fed President Mary Daly during the day. But earnings and tariffs will be front and centre today, that's for sure. The next thing you need to know about is that commodities trader and mining giant Glencore has abandoned plans to move its primary listing away from London after reviewing a potential move to New York. The London-listed miner said in February it was considering moving its primary listing to the Big Apple. The Swiss-headquartered firm said that shifting its listing away to a rival bourse such as New York would not present value for its shareholders after carrying out a formal review of its options. It reported a net loss of $655 million in the first half of 2025, almost triple the $233 million loss during the same period last year, amid lower coal prices, copper production problems and uncertainty caused by Donald Trump's stop-start tariffs, including on US mineral imports. In response, the company has launched a $1 billion cost-cutting program to try to shore up profits. Its shares are down almost a fifth this year, and as you saw earlier, they fell over 4% in early trade. And the final thing you need to know about before the opening bell rings is the latest news concerning tariffs. Countries are pushing for last-minute deals as Thursday's tariff deadline approaches. In fact, it looks like even Canada may be willing to remove some counter-tariffs. Well, let's dig deeper into tariffs as the deadline for deals looms. Well, Yahoo Finance Washington's correspondent Ben Werschel breaks down where current negotiations stand.
We have kind of a last-minute flurry of pushes there. I put it in sort of two buckets for folks. The first is countries that do not have a deal. Switzerland and India are the two biggest ones in focus there. The Swiss president is in Washington today. She announced a last-minute trip here to try to get away from the 39% tariffs that are set to be levied on her country there. She's trying to offer more options to the Trump White House today to do that. TBD if that succeeds. On the other side of the spectrum is India, who appears set for increased trade tensions for the short term. Trump promised today that he, in addition to the 25% tariff he's offering, he's looking to increase it in the next day, in his words, substantially higher because of India's consumption of Russian oil. India is very much in the kind of crosshairs this week because of both this trade deadline, but also a Russia deadline on Friday over Russia sanctions. On the other side are countries that have a deal but are still negotiating on it. And there's a whole lot there. The Japanese negotiator is set to be in Washington this week on auto tariffs. Are they going to have a 15% rate on auto tariffs? Likewise, the European Union still pushing back on things like liquor and spirits. So those issues, those goods are definitely in focus. So a lot of questions about sort of what the world looks like on Thursday morning after these tariffs go into effect.
Bottom line on China specifically, Ben, are we any closer here to extending that trade truce and maybe eventually that Trump-Xi meeting?
Yeah, I mentioned the Thursday, Friday deadlines this week. Next week is the China deadline, August 12th. That's when tariffs could snap back to triple-digit levels if there's no action there. There's a 90-day pause that expires then. The widespread expectation after some meetings in Sweden last week is that there would be another 90-day reprieve, and that would help pave the way for a Trump-Xi meeting later this year. Both of those are still kind of assumed, but we've been waiting for days on that. The commentary from Trump today on this CNBC interview kind of was in line with that. He talked about how and they're close to a deal. The word he used was the word he used, close, and that it made it likely that there would be a Trump-Xi meeting later this year. There's a lot to be worked out in terms of this meeting. There's kind of a semantic fight over who wants the meeting more, but the bottom line is those two still appear to be on pace for the coming days, and which would be a clear market positive.
Okay, we're going to focus on earnings for market movers, and we kick off with Disney. Now, looking at the raw numbers, adjusted earnings per share has come in far ahead of consensus. The figure there was $1.61. The street was expecting just $1.46. However, revenue in Q3 has come in pretty much in line with expectations at $23.7 billion. And if you see how the shares are doing in pre-market, they're down by over 1.5% there. But shares have been climbing steadily since early April after years of fixation on subscriber numbers. Investors seem to have shifted their focus to profit in recent quarters, with parks and streaming delivering gains and countering lower earnings from traditional entertainment. Okay, next up we have fast food giant McDonald's. Now, on earnings per share, the street was looking for $3.15. It actually came in at $3.14. On the revenue front, the expectation was for $6.7 billion. We actually got $6.84 billion, so much better than expected. And shares in the pre-market have reacted positively, up there at around 3%. Now, in recent times, McDonald's has been losing a large number of low and middle income customers, but has been doing more promotions to try to attract them back. And so far from these results, it looks like that's working. Now, remember, the fast food chain is planning to open 2,200 locations and spend over $3 billion doing so. And finally, we have just got Uber results out as well. Now, for revenue, the street was looking for $12.48 billion. The actual figure came in at $12.65 billion. And for earnings per share, the expectation was for 63 cents, which is exactly what we got. And shares in the pre-market didn't like what they heard, and they're down 1.4%, 1.5%, 1.6% now. Now, remember, the Uber is the first gig economy company that has reported earnings this season, so this should give us a clue what to expect from some of the others. Lyft and DoorDash will report after today's close. Now, the performance of Uber's partnership with Alphabet's Waymo is key, and on that front, the firm is definitely targeting Tesla and competing against Tesla and their robo-taxis too. Okay, and after falling, AMD is actually falling after reporting weaker than expected second quarter earnings. But still, one analyst says the upside for the company is unlimited. Take a listen to this.
It looked like strong numbers to me, up about 300 million this quarter and about a similar amount for September. The bottom line is a little iffy, given that they're just in line with the consensus, 48 cents for June. And then the bottom line for next quarter, they don't give an EPS guidance, but they are saying that it excludes any China shipments, which we expect them to get back into China quickly as the Trump administration has relaxed those guidelines. And so that number, 800 million, came out of the June number. And so if you add that back in, then you've got a really nice upside this quarter. And if you add anything back into September, then that 400 million turns into probably something closer to $1 billion of upside. And so I think overall it's a very strong number, and hence the stock reaction after hours.
Cody, let me ask you a key issue that obviously, you know, your colleagues on the street are asking. Broadly, Cody, how big is the AI opportunity for AMD, for Lisa Su's company, with China sanctions reversed?
Well, with China sanctions, it's about $1.5 billion that they expect that they lost this last 2 quarters. And so I think that reverses pretty quickly. Overall, for AI, it's a huge opportunity because you see what NVIDIA is doing. And really, AMD is the only viable alternative outside of the custom ASICs that the hyperscalers are doing. So if you want general purpose CPUs, and every server has to run on a general purpose CPU, to handle all the back office and all the coordination of these hyperscaler data centers. Then if you're looking for an alternative to Intel or NVIDIA, AMD is really the only game in town, and they've been really eating Intel's lunch from a performance standpoint, and from a price and performance standpoint versus NVIDIA, they're also a very, very good alternative. So I think the upside is really unlimited for AMD. It's just a matter of can they capture it, and I think so far they are starting to.
Coming up, Queen's College Cambridge President Mohammed El-Erian weighs in on President Trump's firing of the Bureau of Labour Statistics chief and the Fed's next move. That's next on Morning Brief, Market Sunrise. Welcome back. Now, President Trump has been reiterating his criticism of the Bureau of Labour Statistics following the weaker than expected July jobs report and revisions to prior months. Yahoo Finance's Julie Hyman spoke to Mohammed El-Erian, president of Queen's College Cambridge, about revisions to economic data. Take a listen to this.
I think the revisions are consistent with a lot of anecdotal data that comes from talking to households, that comes from looking at companies' earnings. And what you basically get is the following. Pricing power for those who sell to low household incomes is very low, because low income households are suffering. We also have seen other signs of weakness. So I think what the labor revisions have picked up is a weakening economy, not an economy going into recession, but a weakening economy. And ironically, 2 days later, in terms of trading sessions, the bond market has priced in a weaker economy. The pricing of Fed cuts, that probability, as we heard, is up to 90%. So the fixed income side of the markets has understood what the data is telling us. The equity side is being supported in a fundamental way by two things. One is the notion of FOMO. Every time you've bought a dip recently, in the recent few years, it has been profitable. So people have been conditioned to buy a dip. And second, this distinction between tech and AI and the rest. And tech and AI is enough of a locomotive to drive the whole market up.
I want to talk more about that in a moment, but first I want to dig a little bit more into the labor market figures, because we've talked to some folks who have suggested that if the Fed had had those numbers, they would have cut at the last meeting. Do you think that a cut in September is a lock, and do you think it could even be an outsized cut?
So first, I agree that had they had those figures, they would have cut, and a number of us were urging them to cut based on what we were witnessing from the bottom-up data. But they are very top-down driven, so the top-down data didn't show them that until now. So yes, they would have cut, and they should have cut. Secondly, is it a lock for September? Yes. Is it possible that they do 50 basis points and not just 25? Yes. I mean, remember a year ago, they didn't do anything in July, and then come September, they delivered a jumbo cut of 50 basis points. So I think a 25 basis points cut is a lock. A 50 basis point cut is a possibility, not yet a probability, it's a possibility.
And let's talk a little bit more about the structure of the Fed. You made some waves recently, Mohammed, when you suggested that Jay Powell should just step down now, shouldn't wait till his term is up. And listen, I heard from a lot of folks who did not agree with that assessment. Do you still hold that view? And why do you think that's the right thing?
I do, and like you, I had lots of discussions, and about half of the people I spoke to vehemently disagree, and the other half agree, but don't want to be public about it, because they're worried that this will be interpreted as somehow undermining the Fed. The reason why I said what I said is because I want to protect the integrity of the Fed. Chair Powell is leaving in May for sure. Everybody knows that. He's going to be a lame duck well before this, because we're going to have an announcement about who's going to replace him. The longer he stays there, the more the administration is going to look for cause to dismiss him. The more they look for cause, the more they're going to go into the Fed, and we risk a non-recoverable mistake, which is undermining the integrity of the Fed for a long time. And it's not just the administration. You've seen the Speaker of the House and Congress thinking maybe we should revisit the act. So these attacks are broadening and deepening. Now, is it the first best for him to step down? No, it's not. But the first best is not available. The first best is that he serves out his term and the Fed doesn't get attacked politically. But I suspect we all know that the Fed is going to continue to be attacked as long as he's chair.
OK, coming up, we'll take a look at some of today's trending tickers and give you the news behind the moves. That's next on Morning Brief Market Sunrise. OK, it's now time for our call of the day. So for our call of the day, we're actually going to look at the pharma sector. Why? Well, today we've just had an update from Denmark's Novo Nordisk, maker of the weight loss drug Wegovy. Revenues for that blockbuster drug surged 68%, but overall sales just rose 13%, and net profit came in below expectations, but only just. Just last week, it slashed its guidance on weaker second half US sales growth for Wegovy and also Ozempic diabetes treatment. Both its US-listed shares and its main listing in Denmark are down today. Now, Germany's Bayer, the life sciences behemoth, has also announced it's cutting 12,000 jobs. Now, remember, it's still facing US lawsuits over its Roundup weed killer. It's also facing calls to sell its consumer health unit or list its crop sciences division separately. But it was a different story yesterday when we heard from Pfizer. It raised its 2025 profit forecast. The big thing hanging over the pharma sector, though, has been the threat of increased tariffs. But that's something the company's CEO told Yahoo Finance that he wasn't too concerned by. Take a listen to this.
I don't want to speak for the president, but what he said today, which was very important also, was that it will be a very small tariff in the first couple of years. And then he opened actually the window for a grace period, because I had this discussion with him and I had this discussion with multiple other members of the administration, that a manufacturing site to be completed takes more than 5 years for our industry. In North Carolina, we just completed, not just, but we completed recently, a few years back, the build of one manufacturing site that was one product only. And it took us 4.5 years, and that was our record. So you can't just say you need to do it immediately and pay tariffs until you transfer it. We can't afford to pay tariffs and the investments to transfer.
Now, the next big name to report in the sector this week is Eli Lilly. The pharmaceutical company has seen big wins in recent years from products like Mounjaro and Zepbound. Now investors are anticipating that Zepbound may gain Medicare coverage for weight loss management under a government pilot program, which would significantly expand the drug's market access. Without insurance, Zepbound can cost over $700 per month. Analysts are mainly bullish on the stock and expect revenue in Q2 to come in at $14.7 billion. And of course, we'll tell you here on Yahoo Finance tomorrow if that prediction was accurate. Now it's time for some of today's trending tickers. We're watching Honda, Opendoor and Super Microcomputer. First up, Honda. It's raising its annual profit guidance despite taking a hit from tariffs. The automaker missing estimates in the first quarter, with operating profits falling 50% year over year. Still, the company says the annual impact of tariffs will be smaller than previously expected, citing softer US levies on Japanese goods. Next up, Opendoor. It's sinking after offering disappointing guidance, saying it will continue to face a challenging macro environment and the housing market weakness will persist. The real estate platform hit record levels over the last month as it became part of the meme stock frenzy. The CEO thanking investors for recent enthusiasm on the company's earnings call. Prior to the recent rally, Opendoor was facing a possible delisting from the Nasdaq, but shares down over 20% in pre-market. Now, finally, Super Microcomputer is plunging in the pre-market after the company cut its annual sales forecast. The server maker's fourth quarter results also coming in below expectations as the company deals with order delays due to economic uncertainty. Still, Super Micro shares are up about 88% year to date as of Tuesday's close. That does it for trending tickers. You can track the best and worst performing stocks with Yahoo Finance's trending tickers page. OK, Well, Snap is plunging after reporting disappointing second quarter sales. Why? Well, one analyst says the numbers are still better than feared. Take a listen.
In isolation, the numbers are okay. I would call them as better than feared in analyst speak, given where Snap stock has been over the last couple of months. Having said that, if you take that along with the rest of the ad complex, Google, Meta, Reddit, even Amazon, and how the numbers of those companies have trended over the last, call it a week or so, Snap results do not look very encouraging. Growing ad revenues mid to high single digits, while almost every company so far has exceeded expectations materially and raised outlook for 3Q, given where we are in the current economic cycle. So that's what is affecting the stock sentiment here, that in isolation, the results seem to be okay, but along with the rest of the ad complex, they are not encouraging at all.
To your point, Rohit, I mean, we did see strong numbers from Alphabet, from Meta, but the stock down here, listen, it was already down nearly 15% this year. Heading into the print, it's down another quick 15% in the after hours. This after hour move, Rohit, is it justified in your opinion, or was this an overreaction?
I would think stock should be down, perhaps at least high single digits, maybe double digits. Perhaps there is a line to recovery, but regardless, these results are not as positive for the company as one would have hoped, given where we thought that for the company's stock to move higher, they probably need to have at least inline results. Their EBITDA numbers missed what we were modeling for 2Q. And even the third quarter guidance is just bracketing our expectations. So all in, I think estimates would probably remain unchanged, and stock probably gets hit driven by the sentiment when you combine it with the rest of the ad complex. So that's where we are at on Snap. I think on top of that, a smaller company growing ad revenues mid-single digits isn't something that we hope to hear consistently. So.
Okay, that's almost all we've got time for, but let's have a quick check on the markets. We start with Asia again, and it's really interesting to note there the Shanghai Composite is actually advanced to its highest close in more than 3.5 years. That's basically underpinned by market hopes for an extended trade truce between the United States and China, and that they would hopefully reach a final deal. Moving on to Europe now, and European shares also in the main trading high. The DAX, they're just slightly in the red. But the winners there are industrial and energy stocks, but the losers are personal care and healthcare, obviously with Novo Nordisk as well, being the biggest laggards in Europe. Let's have a quick look at the US futures and where they stand at the moment. And yeah, a sea of green at the moment. Don't forget, we've got some earnings due after the closing bell, including Airbnb and, as I mentioned, Lyft and DoorDash as well. Look out for those, especially after what we've heard from Uber today as well.